Um,
Yeah, your screen is clear. I can see it from this end.
Hallelujah. All right. Thank you. Thank you. So, as I was saying, when I learned about ETFs, I used to see them as memory cards. These memory cards contain more than one stuff in them, pictures, videos, documents, and everything. That was how I saw ETFs for a very long time. But I want you to think of it as a basket that has different investments. So think of a fruit basket that has apple, banana, and co. So think of ETFs like that. You have, you have this particular stock, and that particular stock. Don't worry, I'm going to show you guys what I mean. But again, an ETF is a basket. On a normal day, given all conditions met and everything, it trades like a stock. So you can open your stock trading platform and go in there and buy an ETF. What is in an ETF when I say basket? Well, it contains, it can contain stocks. A lot of them actually contain stocks these days. Um, some contain, gold, some Bitcoin, some bonds. In most cases, there are also ETFs that contain stocks, gold, and Bitcoin. You know, so kind of like kind of like a mutual fund, but not a mutual fund. If you buy one particular ETF, you have access to so many assets inside that basket or inside that ETF. Again, don't worry, we are going to, go through all of this properly, visually later. Now, ETFs have been around since the 1990s. Um, there used to be an argument online about how the first ETF came from Canada, and then people were like, no, it came from the United States. There's also a conversation around how the idea of an ETF even came from a physicist. It wasn't a financial advisor. It wasn't an investor. It wasn't an asset manager that came up with the idea. It was a physicist that came up with the idea of an ETF. And then over time, it just became a thing. Now, they became popular due to low cost and diversification as well. People wanted options. People wanted to be able to pay for one thing and get exposure to multiple things. That was how ETFs, really just blew up. Don't worry. Again, I'm going to show you these things at some point. Now, one of the things that we don't talk about very often is who issues ETFs in the first place. Well, they're actually created by investment firms, fund managers, asset managers, sponsors as well. But before I talk about that bit, I do want you to remember that an ETF is a basket. It's in its own way an index. What does that mean? What does an index mean? Well, an index is something that basically um, it's a name you give to like two or more things. So an example of an index now in a sense is the top 10 banks in Nigeria. It's 10 banks. You group them together and you can just call them top 10 banks ETF. Another word for that ETF, you can call it top 10 banks index. It's just indexing the amount of, these 10 banks in Nigeria. So when you hear somebody say an index or an ETF, they are in a way just letting you know that it's something that contains multiple stuff. I'm mentioning this part because while it's not on my slide, off the top of my head, I just remember that some people sometimes say the S&P 500 index. And you're like, is the S&P 500 index same as the S&P 500 ETF? Yes, it is. Potato, potata. It's the same thing. The S&P 500 index indexes the top 500 companies in the US. The S&P 500 ETF, again, indexes the top 500 companies in the US. It's the same thing. They are talking about the same thing. Now, these asset managers, these fund managers, a lot of the popular ones out there these days are BlackRock. BlackRock is really, really huge. There's also Vanguard. Vanguard are the guys behind the Vanguard S&P 500. There's State Street as well, which is the SPDR. There's Invesco as well. You probably have heard of, QQQM, and co. They came from there. There's Fidelity as well. Fidelity, they also have a bunch of ETFs. Then there's, the Chaswab as well. So these are the guys that actually issue ETFs. When they issue ETFs, exchanges list them for other people to buy, people like me and you to buy. Local asset managers can create their own ETF, but they still have to list it in an exchange for people like me and you to trade. So these stock exchanges, think of them as a marketplace where people go to buy tomato, pepper, fish, and co. People go there to trade these things. They are not the one that would issue ETFs in the first place. They only list and allow people to trade them. So the Nigerian exchange is an example, which is NGX. Before it used to be called the Nigerian Stock Exchange, but now it's the NGX. They pretty much list Nigerian ETFs for you to buy. So you find these ETFs on your Nigerian stock trading platforms. Not all of them, some of them. For the US, the New York Stock Exchange and NASDAQ, they list US ETFs for people to be able to access them and invest in them. Again, what are these ETFs? They are basically baskets that contain one or more, company. Now, ETFs versus stocks. What are the differences between both of them? Stocks, a stock will represent one company. So you have Dangote Cement PLC. That's one company. You have Dangote Sugar as well. That's another company. It operates as a separate entity. You have Apple. You have Netflix. You have Microsoft. These are all companies. These are all stocks. When you invest in them, you are buying shares, of their stock. ETFs, on the other hand, is basically a basket that contains one or more company. It can be Netflix, Apple. Um, Let me think of a very ridiculous name: Netflix, Apple, PLZ. Those are three companies. I can just take those three companies and then just call them NAP ETF or something, and that's how an ETF is born. Obviously, I'm not a fund manager. I can't create one, but I'm just giving you an example. Um, ETFs reduce risk through diversification because these fund managers, what they do is, imagine you have the top 10 performing banks in Nigeria, you put it in an ETF, and then because they are the asset managers, they have the power to actually remove a bank from that list when it's not doing well. So if, for example, um, the top 10 banks contains, Zenith, UBA, GT Bank as well, and then GT Bank is not doing well, the asset manager has the right, has the power to actually go there and say, uh, GT Bank is no longer a top 10 bank in Nigeria. We're going to remove it from our ETF. They'll remove it, then replace it with another one that is doing well. So if you have the time, you can just Google now um, stocks that were removed from ETFs, removed from the S&P 500, for example, stocks that were removed from the S&P 500 in 2025. You're going to see the stocks that were removed and the stocks that were added. So ETFs reduce the risk of you losing money because if a stock inside that basket is not doing well, the fund manager has the power to actually remove that particular, company or stock and then replace it with another. Stocks, on the other hand, they depend on one business. If Dangote Cement is not doing well, your money is not going to go up. Dangote Sugar, for example, they were not performing well in recent years. Before 2023, they were not performing, or was it 2022? They were not performing well. In fact, some of their competitors that were also producing sugar and running operations around the sugar business in Nigeria were shutting down. Dangote Sugar wasn't doing well. They were losing a lot of money, and because they were losing a lot of money, they stopped paying dividends. It was that bad. So if you had invested in Dangote Sugar at the time, you would have lost money. Dangote Sugar started recovering around 2023, 2024, then 2025. They are trying to recover again because they are not even paying dividends as of now. They said they'll start paying dividends around 2027. But again, I'm digressing. Stocks, when you invest in a stock, you're investing in one company. If it doesn't do well, your money is not going to grow. But if you invest in an ETF, your fund manager can manage it properly. So we've covered 5 slides. Here, I'm going to share my screen now. I'm already sharing it, but I'm going to show you guys an ETF. This is one of the most popular ETFs out there. Can you guys still hear me and see my screen?
Yes.
Okay. Second question. Do you guys know what an ETF is now? With these few explanations, do I need to go back?
Yes. No, 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 no. I don't think
Okay.
so. It's understandable.
Awesome. Great. So the very first thing I said, or one of the first things I said on the slide is ETFs trade like stocks. So they are listed in a market like stocks. The stock market is currently open for the next 5 hours and 42 minutes. The US stock market is open today. As you can see, these numbers are moving. So the ETFs are basically trading like stocks in a marketplace. So I'm going to zoom in a bit because I want to show you guys some things. So when you're going over an ETF, the same way you go over stocks is the same way you go over an ETF in the market. When you click here, you can actually see more information about this particular ETF. This is the Vanguard S&P 500 ETF, VO. Here you can see the year-to-date performance. Year-to-date basically means from the first day of this year till now. This is how it's doing so far. 1 year return, the last 365 days, this is how it's doing so far. 3 year return, the last 3 years, this is how it's doing. Now, there are other ETFs that other people look at when they are looking at VOO. There's VTI, there is QQQ. One of the things you notice with these ETFs is you come here, what do you see here? It says Vanguard. But when you come here, this is another ETF. This one is QQQ. It says Invesco QQQ Trust. That brings me back to what I was telling you guys here. Common global ETF issuers: BlackRock, Vanguard, Invesco, Fidelity, and Co. So do you see the name reflecting, with these ETFs? You see VTI, Vanguard Total Stock ETF, the QQQ, the VGT, SCHD, that's the Schwab one, SPY. This is one of the first ETFs that was created in the world. So um, a lot of investors and traders actually trade the SPY. But we're not talking about stocks, right? We're talking about ETFs. What are the stocks that are inside this Vanguard S&P 500 ETF? Well, if you go all the way down here, you see the top 10 holdings that make up 39% of the total assets in the S&P 500. It's Nvidia, it's Apple, Microsoft. If you go through this, you can see them, and you also get to see the sector that a lot of the stocks that are inside the ETF, the sector that they are from. So a huge portion of them are from the technology sector. A huge portion of them are from the financial services sector. That's SoFi and Co. You have communication services, consumer cyclical as well. Consumer cyclical are, um, if I recall, they're like water, energy, fuel, and co. There's healthcare, there's industrials, there's consumer defensive, then there is specifically energy, utilities, and co. Actually, no, water is under utilities. I stand corrected. Water is under utilities. So these companies that operate in these sectors are in the S&P 500. So again, an ETF is a basket and it contains multiple, again, stocks. But it's not all the time that it contains multiple stocks. It can also contain a bunch of other things. It can contain gold, it can contain, Bitcoin, and a bunch of other assets out there. It depends on the ETF. If you want to see news about the ETF, you can come to news. If you want to see the top companies that are holding this particular ETF, you can come to holdings. Basically, all the usual stuff you would see when you're analyzing a stock. In the previous call we had, I talked about how to analyze a stock and, decide whether you want to invest in it or not. So why ETFs are better than stocks? This is funny. It's funny because someone else out there who trades stocks daily will tell you, "Oh, stocks are better than ETFs," and then someone else will say, "No, ETFs are better than stocks." Don't worry, I'm going to explain why they think like that. But largely, it depends on the kind of person you are, your age as well, and the kind of responsibilities that you have. So I am going to explain all of that in a bit, but ETFs are better than stocks because the risks are lower. Again, if a particular stock inside an ETF is not doing well, the fund manager can just remove it and continue. Um, Lower management costs as well. Those small fees, expense ratio and all of that that you have to pay when you're buying a particular stock. For stock, you have processing fees as well on different brokerage platforms. Those fees that you pay when you're buying Nvidia separately, Apple separately, and Co separately, instead of paying all of those fees, you can just buy one ETF that contains all of that stock, and that's it. So the management costs are lower in a sense. Um, ETFs are easy to buy and sell as well because of huge liquidity, huge volume. If you know me very well, you know that I don't trade, I don't buy any company, I don't invest in anything without volume. Volume is basically how many people are trading it, how many people are buying and selling. We are able to trade daily, even in a traditional brick and mortar, market, because there's somebody willing to sell tomatoes to you. You are the buyer, there's somebody selling. If nobody is selling tomatoes to you, you will not buy, right? That is how trading is too. Trading is buying and selling. With ETFs, there is always some hedge fund or some, company out there or somebody out there that is selling their ETF. There are, fund managers as well that are looking to get more and get in and get out and all of that. So it's just easier to buy and sell ETFs compared to a lot of stocks out there. Also, ETFs are ideal for beginners and long-term investors. What does this mean? Well, if you don't know what to invest in, instead of buying Apple separately, Nvidia separately, and you're not even sure, why not just invest in an ETF that contains like a basket that contains these stocks? So if these stocks are doing well, your money will be, doing well as well. So if you don't know what to buy, if you're confused, you can always go with ETFs. Also, if you're a long-term investor, you're a dad, you're a mom, you're somebody who wants to preserve your capital over time, you can always invest in ETFs. Why is that? Because ETFs are safer generally compared to stocks. Also, why is that? Because when a stock inside an ETF is not doing well, the fund manager has the right to remove it and replace it. So as you can see here, returns over time for ETFs have not been bad or horrible. So if you look at the 1 year return for this ETF, in the last 1 year, it's 18% up. In the last 3 years, it's 22% up. So you have not lost your capital if you invested in this ETF for that long. In fact, if you invested like earlier this year, just January 1st this year, from then till now, well, market is closed on, New Year's Day. But if you invested, say, January 2nd, by now you'd have had 1%, you'd have been 1% up. Again, because all of the stocks that are, inside this S&P 500, most of them are doing well at the moment. And that is why, you see this. Or, well, the ones that dominate it are doing well at the moment. So that is why it's safe to invest in ETFs. Now, next one, the top 5 US ETFs. Actually, I just remembered something. It's not in a slide, but I'm going to mention it here. Some people will say stocks perform better than ETFs because the growth you would usually get from an individual stock sometimes would actually be more than that of an ETF. So, for example, if you invested in Nvidia, say like 5, 6 years ago, you would have outperformed the S&P 500 by now because the last 5, 6 years, Nvidia has done insanely well. So I just clicked on it. Let's open Nvidia real quick and see how the performance has been in the last, couple of years. Let's do 5 years. So the last 5 years, Nvidia has done 1,292%. So if you had invested, say, 2021, by now you'd have made 1000 plus percent of your money. So sometimes individual stocks tend to really, really go up if the company is doing well. If the company is not doing well, of course, you can lose all your money. So you lose that safety that you'd usually get from investing in an ETF. So it's kind of like think of it as like a 50-50 risk thing. You can invest in individual stocks because you are sure that company is going to do well. But if it goes south, you might be cooked. But with ETFs, you have a safe landing zone in a sense. Am I making sense? Can you guys still hear
Yes,
me?
yes, yes.
Okay. Then let's go to the seventh one. These are the top five US ETFs. The SPY tracks the S&P 500. VOO as well tracks the S&P 500. But it's low cost in terms of expense ratio and everything. QQQ is technology focused. Invesco's ETF. The VTI is the total US market. Um, HVV is large cap exposure. There are so many other ones, so many off the top of my head. I can mention so many more, right? But these are the popular ones. These are the guys that trade stocks like daily, like not just buy, invest, and sell at the end of the week or at the end of the year or something, but trade daily. Most of them trade the SPY. Most of them watch the SPY daily. When I started, I bought VO S&P 500. I think I bought with like $50 or so. But the thing is, even if you do 10% in like 6 months, 10% of your $50 is not a lot of money. So I didn't enter with much capital. So at the end of the day, I had to sell it, and I don't know what I did with the money. But but yeah. There are also some ETFs that are actually cheaper in price. Like don't you do it's not always this expensive. This is $637. I knew this ETF when it was like $400, but they are not always this expensive. It depends on the ETF you're investing in. Then, um, why the US ETFs are popular in the world? A lot of people trade US ETFs because of these reasons. So the liquidity part is the volume thing I'm talking about. There are a lot of people buying and selling globally, buying these ETFs globally, and because of that liquidity, it's always easy for you to get in and get out. I mean, if you look at the volume for the Vanguard S&P 500, look at the volume. It's 2 million. Average volume is like 9 million. So it's like the trading volume is really, really massive. And because of that, it's always good to trade, stuff that have really huge volume. You need volume if you want to be a successful investor or trader. Without volume, you will not sometimes be able to sell a stock or an ETF. Now, let's come back home to Nigeria. These are the top five Nigerian ETFs in terms of just popularity, liquidity as well. So you have this one. There's also the all share as well, all share index. There's new gold, which is the gold exposure one. There's the Stanbic ETF as well. I have a confession to make, by the way. I haven't traded any Nigerian ETF before. Why is that? Because a lot of the platforms that I've used to buy Nigerian stocks don't have Nigerian ETFs. And it's annoying as hell. I hear that you can find Nigerian ETFs on Trove, can invest in it, on Trove. I haven't been able to set up Trove because they are still locating me or tracking me with my residential address and then my mother's house. It doesn't make sense. So they are like, your location is different from your actual address, blah blah blah. So I've not been able to set up on the platform. But if you use any Nigerian stock trading platform or any Nigerian trading platform, try and see if you can find this one and this one because they are quite popular. And then the Lotus Halal as well. Also, if you want this slide, reach out to me on Instagram or just send me a message on WhatsApp. I'll send it to
Yeah,
you.
sorry, sir. God does have it.
Who has it?
God does.
Can you type the name here in the chat? Code what? Okay, I'm guessing it's going to type it. But yeah, there are so many of these platforms don't have these ETFs, and it pains me. Why Nigerian ETFs are popular? Well, they actually, first of all, there are not so many of them. Actually, it's not like we have like 10,000 Nigerian ETFs or something. I think there are like 3,000 ETFs out there in the US market. But if you come back home to Nigeria, there are not so many. So you have the simple market access. You can also buy ETFs with like really small money. These ETFs again helps people to diversify into different sectors, and you can buy gold ETF to hedge against inflation. Then there are also in recent years Bitcoin ETFs. I don't know who started filing for this. I don't know if it was Vanguard or BlackRock. I don't know who started it, but um, in recent years, so many hedge fund managers, so many asset managers out there have started creating these ETFs. You have the HODL, you have the BITB, you have the IBIT. So these are all ETFs that you can find. Let's open HODL, for example. So these ETFs give you exposure to Bitcoin. So if Bitcoin is this Vanek, if Bitcoin is going up, these ETFs are going to go up. If Bitcoin is going down, these ETFs are going to go. I think Bitcoin is around 89, 90K today. So here you can see the trust will hold Bitcoin and will value its shares daily based on the reported market, blah, 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 Bitcoin benchmark rate. I don't know what else is in it. I think it's just Bitcoin. What the heck? I'm not
Mr.
sure,
Magnus,
but
I've typed
yeah.
it.
Okay, I'll check. Thank you. So these ETFs these days, they basically give you exposure to Bitcoin. If you don't want to buy Bitcoin directly, if you don't want to go on Binance, you don't want to go on Bybit and Co to buy, to buy Bitcoin, you can buy these ETFs. Every time Bitcoin goes up, they go up. Every time Bitcoin goes down, they go down. If we zoom out like last 1 year, it's just 4%. If you zoom out like last 6 months, of course, you guys know Bitcoin has been shit. So it's been down as well. Also, a lot of people are getting in on these now because they are cheaper. This is just $25. I mean, fractionally, you can buy with any amount. You can buy these ETFs with like 5,000 naira, 10,000 naira. But the more money you spend, the better. Also, the more money you spend, the more risky it gets because you can lose your money and you can make more money. Also, if you don't already know by now, this is not financial advice. The purpose of this class is to basically explain what ETFs are. You can do your research on your end when you know what ETFs are and then decide which one you want to buy, right? But I don't want to be that guy who will tell you go and buy this one. But a lot of people who have been buying ETFs, lately have been going for the SPY, VO, and Co. I know a lot of parents who live in the UK. I know another parent as well who lives in Australia who buys a lot of the S&P 500. This VO every month. So some people spend like a fraction of their money, like $500, $200, $1,000 to buy ETFs like every month. You can do that as well. It's not a race. It's not a competition. Just buy with any amount you can afford to invest with. Now there are also gold ETFs. There are so many ETFs out there. There are ETFs for even AI and robotics these days. So this is the one for gold. You can trade any of these. One of the questions I've been getting a lot lately is people asking me, "Hey Magnus, I want to buy gold, but I don't want to buy physical gold, and I also don't want to trade, gold in the forex market. Can I, buy gold stocks instead of gold stocks? There are companies out there. Granted, there are companies out there that mine gold, right? Like IAG. There's also a South African one. I've forgotten what it's called. It's very popular. If I remember, I'll let you guys know. Um, but if you don't want to invest in these individual companies that mine gold and mine silver and do all of that, you can actually invest in gold ETFs. So these are some of them. Again, if you want this slide, I can send it to you after this call. So with these few points of mine, I hope I've been able to explain what ETFs are. I didn't want to go too far and use a lot of technical terms and everything. That's why I prepared this short slide to just explain what they are. Now, what you do from here is really your business. If you want a one-on-one conversation, with me on how these things are traded, which one you should buy specifically, and all of that, you can reach out to me. That's fine. But if you really take your time, now that you've understood what ETFs are, if you really take your time to go out there and check, you are actually going to see a lot, and then you can decide which one to invest in. The one I recently bought is the ARTY. It's the iShares Future AI and Tech ETF. It contains some companies that are doing some really amazing stuff in the AI and robotic space. This ETF has suffered me for a bit because there is this conversation around how there is a bubble coming, and because there is a bubble, that fear of people saying, oh, there's a bubble coming, the AI and robotic space is going to pop. There are people building stuff on paper, but they are not building actual stuff, which is true, by the way. It's like the dot-com bubble of 1999. There are so many companies and people out there collecting money from investors saying they are going to build this and that these days, but these guys are not building shit, right? But there are also some really good companies out there now that are making amazing stuff, and you know, some of them are like Micron, Nvidia as well. I mean, everyone is relying on Nvidia these days for their GPUs. There's AMD as well. So this particular ETF tracks these companies. Marvell as well, AVGO, CoreWeave as well. This company, Nvidia owns a lot of shares of CoreWeave. A lot of them do semiconductor, they're in the technology sector, some are in the utility sector as well, some are in the robotic sector as well. um, Basically this particular ETF tracks you know these companies. So if the companies are doing well, it will do well. In the last 1 year, it's 31% up. In the last 3 years, it's 21% up. Performing 31% up in the last 1 year is actually good, because this shows you that it outperformed the VO, the S&P 500. But again, a lot of people are staying off this particular ETF because this whole AI and robotics thing, at some point, it might come crashing down, because a lot of people who are taking money are actually not building anything tangible. So you can also look at the AI and robotics ETF. That's really where the money is going these days. I mean, last 6 months is done 20%. The last 1 month is just like 1%. Last 5 days also around 1%. etc. So it's growing, but you see that there are a lot of pullbacks. If you check the chart, sometimes it just pulls back, really, really crashes, and then it starts going up again. When it happened last was around April. So there are so many ETFs, so many. There's an ETF that tracks, all the things that are not in tech. There are ETFs that tracks the top banks. There are ETFs that tracks the top tech companies, and on and on and on. You have to find a sector. There are ETFs that also tracks the health sector specifically. So companies like UNH, United Health, and Co. So there's an ETF for pretty much almost everything these days. You need to find the one that you want to put your money in, and then put your money there. But most of the popular ETFs are around tech. But you don't always have to do tech. You don't always have to invest in tech. Because one of the things I'm noticing these days as well, and again, I'm yapping off point, a lot of the companies who are producing consumer goods like Kroger, like Costco, like Walmart, that people can go to buy things, they are also not doing well if you put them inside an ETF. I'm sure there is an ETF for that, but they are also not doing well these days. It's just that they are not performing as much or as well as the the tech sector and the AI and the robotics. That is why people are not rushing to it. But if you want safety, again, you can also look at ETFs that are not in the tech sector. So, questions. Does anyone have questions for me so far? This is a good time, guys. You can ask me anything. Can you guys still hear me? Or have I just been yapping all this time?
Yes.
Okay. So questions. Any questions for me? Do you want us to take a look at any ETF? Do you have any question around investing? Please let me know. If you don't have any questions, then ugh,
Hello, Magnus.
hi.
All right. All right. So I'm the guy that contacted you yesterday. We're supposed to have a one-on-one, but there was no time. I was busy. You were busy, if you remember yesterday.
Oh yeah. You said you were okay. I remember you were at the mall.
Exactly. Yeah. I don't know when you're gonna have time for us to talk.
Tuesday. Tuesday. My Monday is booked. I'm free on Tuesday.
In the evening, because I mean, um, during the day would be a bit difficult. Because I'll go to work. But I'll be
Okay,
free
send me a
from
message on
5
WhatsApp. Let's organize it.
All right, all right.
Yeah.
So I mean, my questions probably I mean, they might be private. I mean, I'm gonna ask it
Are they around
on those.
ETFs?
They're around everything, investing.
Okay, just ask me one. I can take the rest later in private, but ask me one here.
All right. So what do you think for someone outside Nigeria and who wants to invest?
Mm-hmm.
Because I mean, my problem or my thought is exchanging money to naira, then investing in naira. Even if you make
Mm-hmm.
profits, and if you try to, you know, change it back to pounds or euros, I mean, you might be at a loss.
Mm-hmm.
So that is my judgment. So I just want to see your idea on someone who is in diaspora and who wants to invest and converting foreign currency to Nigeria, investing, and even if you make a profit and if you want to repatriate the money, I mean, at the end of the day, it might just be probably not worth it. What is your thought
Yeah.
on this?
Can you mute? I hear myself on your end. Okay, good. Thank you. So this is a good question. It's a good question because since the 21st or so of December till now, I've had meetings with people in the UK. I've had meetings with someone in Australia. I've had meetings with someone in Malta, um, someone in the US as well. And we've had conversations around investing, mutual funds, dividends, how to set up on places like Carrywise, which one accepts, all of that, all the bulk of it. So the very first thing I usually say is, if you're not in Nigeria and you want to trade stocks, I think you should start with what you have over there. If you're in the UK, for example, you have trading 212. You can start with that. If you're in the US, you can use Webull, you can use Robinhood to trade. I don't know if Robinhood is in the UK now, but start with what you have first, and just give yourself time, like um, 6 months, 1 year. Like, give yourself time. It's your money. Be selfish with it. Give yourself time. Trade stocks that are on those platforms, like the US stocks and the FTSE, which is the European market stocks and co. Do those first before you consider investing in Nigeria, because the goal of this whole thing, it's not really about the companies. Some people say it's about the companies, it's about the ETFs, it's about the country. It's actually not. We all want to make money. We all want to preserve our capital. That is why we are doing this. So for the sake of capital preservation and trying to make 10%, 15% and everything, start with what you have over there, right? If you want to invest in Nigeria, let it be because of two things. One, you're looking to invest long term, like you're looking to invest in one Nigerian asset and hold it for the next 10, 15 years, that kind of thing. That's one. And two, maybe because you've done a proper research and you know a lot about the Nigerian economy and where it's headed. Um, that research is important because one of the things that it keeps me up at night sometimes, because there are people who are in this call They are here because they trust me. Like they are here because um they can reach out to me, get my opinion on stuff, and I will tell them what I think, and they will take that my feedback exactly the way I gave it to them, and they will apply it. And most of the time, it works out fine, right? Um, if you're investing in the Nigerian economy, you need to do your research about the Nigerian economy. These people have also, we've had conversations about the Nigerian economy, who is competing with Dangote Sugar at the moment. What are the top 10 banks in Nigeria? Why is Starling Bank slowing down these days? Why Starling Bank is holding a lot of cash at the moment? Why are they holding a lot of cash? Why are they not doing stuff with their money? Why has Zenith Bank stopped growing in recent times? So if you want to invest in Nigerian economy, you need to be very sure that you know where the economy is headed. You've looked at the past couple of years, you've seen MTN and Co, and you want to invest in it. So that's the second thing. Maybe another advice I would give, I'll add to all of this, is if you don't need the money and you want to invest in Nigeria, there are so many mutual funds around here that you can look at. So if you don't need the money and you also don't trust the country where you are, maybe they can start to repatriate Nigerians tomorrow, or something else can come up, and you want to invest in your home country, you can also consider investing in Nigeria. But ultimately, do it because you want to keep your money there for a long time. Because of the difference, the naira dollar, naira pound, naira, and co euro difference, you will lose money for sure at first. Like, it's mostly unavoidable these days. Also because of the fees and charges and everything, you lose money at first. But you have to also make peace with the losses. It's like me investing in Zenith Bank a few days back, and I am paying like 6,000 naira also for brokerage fees. Now, I'm thinking, how much will you have to pay if you have to convert British pounds to, you know, to naira and then use it to invest and everything? You lose money, right? But you are investing because you believe or hope that you will make two times, three times that money. That is why people do it. Again, people invest because they want to preserve their capital and again make money. There's like all this other thing, like I like Zenith Bank. I like, stop lying. You don't like Zenith Bank. If Zenith Bank offends you tomorrow, you bounce to another bank. People are doing this because they want to preserve capital, and they believe that their money is going to go up. So these are the things, really. These are the reasons. These are the things I would say you should look at. There are going to be losses for sure, but also start with what you have over there. Start with the Robin Hoods and the trading 212s and co, and then later you can start investing in Nigerian this thing. There are also people who have like 800,000 naira, 3 million naira to spare. Like they just have that money somewhere in Nigeria somehow. I don't care because it's their money, but they have that money in naira already and they want to put it in something. So they reach out to me. I did a portfolio rebalancing for a woman in the UK recently, and you know, we had to go over her. I don't know if she's here, but we had to go over her investments, and we're able to say, oh, don't invest in this anymore, buy more shares of this, and all of that. So some people already have money in Nigeria. If you already have money in Nigeria, you can look at that. But I'm guessing you don't. That's why you're asking. Um, there are going to be charges, there are going to be losses when you're converting, but you're doing it because you believe that your money is going to go up. The Nigerian economy, the growth and everything is going to keep going up over time. And I think the Nigerian economy is going to go, you know, do better with time. But there's just so many loopholes and exploitations in a sense. Like sometimes money just disappears from the Nigerian economy. And you just hear something like, we recently heard that some money were missing from somewhere and it was in the news and that happened. And I don't know what to say about that. No comment. But yeah, there are things like that, and I feel like they are not really doing anything about it. Nigeria is not really trying to prevent those loopholes and stopping money from disappearing. And you know, it's not an encouragement to invest in Nigeria and this thing. But I hope I answered your question.
Yes, you did. And if I may probe further,
Yeah,
I mean, we're still gonna talk about this later on the one-on-one. But
yeah,
basically, I feel, I have responsibilities back home, and then I do send money every month. But I'm
yeah.
looking for a kind of investment, probably, um, I mean, these savings that you lock money, then you get upfront. So I'm looking at something that just we generate naira. So I won't need to be, spending money every month. I can use that naira, that profit to settle those bills, every month. So I'm thinking in
Mutual
that
funds.
line. Mutual funds.
Do
Mutual
mutual
funds, right?
funds.
The mutual funds.
Yes.
Okay. And what about the save lock and that you get the profit up front and then
You're locking.
the
Yeah,
which
that's
which is
also
better?
fine.
That's also fine.
Can you mute? Sorry, the feedback thing is back again. So, um, the safe lock thing is also fine, but it's a one-time thing. If I safe lock 4 million naira now for 1 year inside Piggyvest, they'll give me my interest upfront. That's the money. They've given me that money, and that's it. It's not like I'm going to be getting money every month or something. Um, if I recall, it doesn't work like that. Bamboo also has something similar. They just give you your money upfront, unless you use another feature within Piggyvest that will be giving your interest daily or weekly. There's even one that you have to claim your interest and everything, right? But I wouldn't suggest safe lock for something like this. There are low risk mutual funds, um treasury bills as well. Those are very, very low risk, because for T-bills you can just leave it for like 90 days and get your money. It's fixed in that sense. You get your money and then you also get the returns. Mutual funds For mutual funds, um it's just easy to get in and get out of mutual funds compared to some investments, even like the safe lock. There was a time I had to send an email to Piggyvest. Omo, Sakpa hold me that year. I think it was like pre-COVID or so. I've been using Piggyvest since 2017, since I was a student. There was a time I I oversaved on the platform, and I was not able to get it out because I safe locked it. I had to send them an email. I had to beg them, and they had to release the money to me and all of that. So you want to invest in things that will give you like returns every month or every quarter, and then you can take you can take the returns and spend it or reinvest it and all of that again. But when we have our one-on-one, we can discuss further, and but off the top of my head, mutual funds, I got like 6,000 naira from a mutual fund yesterday, because this is one of those um ARM aggressive mutual funds. I lost 14,000 naira at first, but recently it's been doing well. So every day I'm getting like notification about 3,000, 6,000, 1,000 naira, that kind of thing. Although I haven't, gotten out of the investment, I'm still in it. I'm still watching it, and it just feels good just knowing that your money is piling up daily, and sometimes it reduces. But mutual funds are generally safe in Nigeria. I say this as somebody who has met a lot of people who were even doing mutual funds way before me. There was a lady that was doing NYSC. She said she also did mutual funds, and she was able to actually like manage her mutual funds like every week. So
All right. Thank you very much. And we get to speak so we can have the one-on-one because
yes,
I have a lot to ask. Thank you.
please send me a hi on
Please send me
WhatsApp.
a
I
hi
don't
on
think I
WhatsApp.
saved your number.
I saved your number. Sure, I will.
Thank you.
Thank you.
Someone said agree. Ifoma, I'm a big fan of mutual funds. Yes, mutual funds are okay. Uh Sorry, I'm scrolling through our chat real quick to see what is the best app to invest in US ETFs. There are some US ETFs on Bamboo. A lot of them actually, a lot, and they list these things like every week. Someone said Codros. Okay, yeah. Said Codros have it, or I will check out their app. Uh, you're breaking up very badly. Voice is quite okay. That was 3 minutes into the call. I don't think I'm still breaking up badly. So I'll take one more question and then we'll close. We have 2 more minutes. One more question. I'll stop sharing my screen so I can finally check my WhatsApp and see what's happening over there. Someone raised their hand. Idris, hi. Idris, you have your hand raised. Can you ask your question, please?
Please, I don't join by 4 o'clock. I have some certain
Okay,
excuse. So please, do
no
you
worries,
record
no
the
worries.
class?
Yes, this class is currently being recorded. I am going to edit the video though. I'm going to cut out some, choppy parts and for privacy as well. I'm a big fan of making sure everyone is safe. So I'm going to cut out some parts and then I will upload it on YouTube. And you can send me a message on Instagram or WhatsApp if you have my WhatsApp number, and I'll send you the link when it's uploaded tonight.
Okay, thank you, thank you.
You're welcome. Okay, so let's stop here. Thank you all so much for joining this session. I am going to upload the video on YouTube later tonight or tomorrow, and I will send the link to you guys on WhatsApp and I will share it on my Instagram story as well. If you have more questions about investing and ETFs, please feel free to reach out to me. Again, ETFs are safer than individual stocks because you don't lose a lot of money when you are investing in ETFs unless something happened, something catastrophic happened to the entire market, you know. But yeah, it's 5 o'clock. Thank you all so much and have an amazing weekend.
Thank you. Thank you.
Yeah,
Thank you so much.
you're
Thank
welcome.
you. Appreciate.
You're
Thank
welcome.
you.